recording.
Okay, cool.
Let's go ahead and get started.
All right.
Hey guys, if you're looking to buy a property that is a little bit further into the rural area, you might consider an option that would allow you to do a zero down loan, even though you're not a veteran and may not qualify for other zero down programs. That program is called USDA Zero Down Loans. And today I have Angelo Christian. He is a USDA loan specialist to discuss with me what is it about USDA loans that make them useful for you. Are there any restrictions that we need to worry about and how you could get started? He has a company. You can approach him with any question that you have about USDA loans. Let's go ahead and get started. Thank you very much for joining me, Christian. 1 second. My name is Elena Garrett. I'm supposed to do it for track compliance. My name is Elena Garrett. I'm a realtor with Keller Williams Central, which is a brokerage in the Dallas-Fort Worth area of Texas. I have my own Facebook groups. One is called Acreage DFW, and another is called Horse Ranches DFW. I'm in love with horses, so that's why I have the Facebook group. But now let's go to our guest, Angelo Christian. Angelo, can you tell us a couple of words about yourself?
Yeah, absolutely. Thank you so much, Elena, for having me on your show and talking about USDA. So I've been in the mortgage business for almost 20 years. That's what I went to school for, was finance and economics, and started my company in 2005. And one of the first programs that I really got to learn and cut my teeth on was USDA, because USDA loans at that time, not a lot of lenders are doing them. And even today, not a lot of lenders specialize in USDA. And we had a lot of customers coming to us asking, hey, what zero down programs are available? And so at that time, if you weren't a military veteran, the only real option was USDA. And we kept getting all these calls. And at that time, I didn't know in 2005 what USDA was, but the people kept asking for it. So I went and did research on it and found out that with the USDA, it's a true 100% financing home loan, and it has a very low fixed interest rate. And you can even get your closing costs included with the loan. So I said, man, this is a very interesting loan. How come no one is doing this loan? This is back in 2005.
Great question. So, still nobody's doing this loan.
Yeah, even still today, 16 years later. So anyway, I went through a few loans in the beginning with some of my clients and learned the process. And I fell in love with the program because it has the idea behind the USDA is to spur the economic growth and development of rural housing and rural economies. So the plan behind what the government is trying to do is to help, because, for example, you're in DFW. When I first started doing USDA, Salina, Frisco, Red Oak, this was no area.
Don't say Frisco. Really, Frisco?
Yeah, 16 years ago. I mean,
oh my God.
Yes. So, and then all these like Argyle, like some of Midlothian, no one even knew what that was. And so in your area, so I started doing a bunch of USDA in that area and helping people to get 100% financing with no money down. And so, like you and probably another 20 other realtors in DFW, they kept calling me and say, hey, can you give my client the USDA? Hey, what's going on? So I made all these videos about USDA because nobody was doing it.
Do you still have those videos?
Yeah.
Okay, yeah. So what we can do then potentially is to drop your videos in the description of this video.
Yeah, you can. Yeah, I mean, if you go to our YouTube channel, we have videos that have hundreds of thousands of views, because the reason why a lot of people, a lot of lenders don't like to mess with it, because it is more work. The process is longer. And obviously, it is a little bit long. We'll go into that, but basically, on the back end for the lender, there's more paperwork, and lenders don't like to do a lot of work and they want to get paid quickly. So the thing is that a lot of lenders don't like to mess with that. I actually embraced it, and I really enjoyed it because of the benefits that it offers to the client. And it's a very special program. And then so anyway, so I fell in love with it. And then I hired an underwriter for USDA. She's the top underwriter in the United States for 30 years, been doing USDA loans. Yeah. So
Round of applause.
yeah. So underwriter. So I basically built a whole team around this program, like my loan processor, my manager. So all these people that are working, they understand the product, because the thing about USDA, just like any process, has very specific nuances and guidelines. And so you have to work with people that really, really know this program, because you cannot just go to any lender and say, give me the USDA loan.
Which is a big problem, because a lot of people do USDA loan, advertise them on their website, but when I get the pre-approval or pre-qual letter from them, I don't feel very confident that the process will be smooth. So guys, for you who are watching right now, obviously Angelo has a depth of experience with that. I think that if you have any idea of that you want to go into the rural area and build your life there, go ahead and contact Angelo just to talk, start a conversation with him and see what he advises you to do. But
Right.
Jumping into our topic, let's go ahead and talk now about USDA loans. By the time that my customers watch this video, they already have a link for the USDA loan guidelines, right? So they don't need that. What they're asking me about is nuances, as you mentioned, that we need to keep in mind so we don't waste our time chasing property that are not feasible
Right.
for this loan.
Absolutely.
So question to you, for the resale homes now, imagine the market is hot, right? You're like a frying pan. I have not had a lot of luck with USDA loans on the resale homes. Usually the feedback that I get is that the closing times are a little bit too long. What is your advice? Let's just say that this couple qualifies for a USDA loan. It is in Argyle. The house been on the market for like 14 or 12 days, so hopefully it's not so. Hopefully we still can get it. What's your advice for talking to the sellers about the advantages and disadvantages of USDA loans and to the buyers?
Yeah, well, I mean, obviously, from the buyer standpoint, it's a no-brainer, because 100% financing, you're getting, low rates. Like if you're doing conventional 20% down, like those rates are like 2.8, 2.9, 30-year fixed. And then you have a very low mortgage insurance. The mortgage insurance is can be ranging here from 0.3 to 0.5. So it's not like FHA where the mortgage insurance is very heavy. So you have all the benefits of the loan. There are some requirements for it, obviously, with income and location restrictions, but other than that, the loan, you can't really, that and VA are the two best loans in the market for home buyers that don't have 20% down. So from the selling standpoint, the biggest thing that I would say, what can help to expedite the process, and what's very important, what I advise to borrowers, is they get pre-approved up front.
So instead of doing a pre-qual, we're doing a pre-approval.
Yeah, pre-approval, get the underwriting out of the way, because what happens is, so the USDA loan, how it's different. So after you close or after you go through the loan process with the USDA and the underwriter essentially gives the clear to close, we have to send that loan to rural development. So it's called to get the loan note guarantee. So what happens in Texas, we close, the underwriter, like with our lending company, when we're done with the loan, before you can close, we have to ship that loan to Temple, Texas. And in Temple is where they do all of the guarantees for Texas for the buyer. So you cannot close until they review the loan and then they issue the guarantee. So every other loan, like FHA, you can close and then the lender after the closing goes and gets the guarantee from FHA. USDA doesn't work like that. You have to get the guarantee before you can close on the loan. So why am I saying this? Because it takes longer to close the loan, because it could take the rural development office an additional 1 to 2 weeks to process that information. So how can you appease to the seller? Well, if you get the pre-approval up front, you can take about 10 to 14 days off of the process to be competitive to close in 30 days, 35 days versus 45, 50 days. Because the seller in a very hot market, like you're mentioning, they don't want, why would they wait 45, 50 days, when they can get the conventional for 30 days, So the only way you can really trim that down is to get your file done up front. And what happens, a lot of buyers, Elena, they just want to get the approval and go under contract, but they don't want to send the paperwork. You have to get all your paperwork in, make sure everything's right for the USDA underwriter to approve you. We'll actually approve you up front. So that way, when we give you the approval letter, you can quickly go under contract and all of the underwriting's out of the way. See,
Gotcha.
so that's your best bet to, and then obviously the other thing too is as soon as you sign the contract, we want to order the appraisal immediately. We do not.
So even though we don't even wait for the inspections, right? Let's go ahead and order the
Well,
appraisal.
I mean, yes. I mean, yes. I mean, if you have, I mean, obviously, yeah, you want to get the inspection done.
But they're not paying. Do they pay for the appraisal on the day that they order it, or can we wait until past the inspections?
You can wait. You can wait, obviously, until past the inspection.
Okay.
The reason why I said that is what I meant was, so as soon as the contract comes in, we want to order. But obviously, it is wise to wait for the inspection to come back before you do the appraisal, especially if you're doing a resale. And if it's an older home, but the appraiser, basically what I'm getting at, we want to, because sometimes appraisals are taking longer, especially in rural areas. So we want to quickly order it, but assuming that the inspection comes back good, then we want to go ahead and send the appraiser out there, because obviously these are areas where there's time leaks. And we want to close those time leaks as best we can. For example, order the title commitment right away. So that way we don't lose any time. And so the biggest thing I'm emphasizing for you guys out there watching this video, you're looking to get pre-approved, is get your stuff, your package over to the lender as soon as possible. Don't, piecemeal stuff. Don't wait for the credit or the W-2s or the pay stubs. The other thing with USDA is they require full tax returns. You cannot just use pay stubs. So they want to see all the tax returns because they go into your income very carefully, because this is an income-based loan. So you have to send the tax returns, all the tax returns, for the last 3 years to your lender. So these things are very important, that you have all your ducks in a row from the application standpoint, because that way you can close quickly, but you have to make sure you're organized with your paperwork.
Gotcha. No, that's an important point to emphasize. I was not aware of that. I thought that USDA loan was 45 days, no matter what you tried to do.
Well, yeah, I mean, you can take time off of it by doing the underwriting up front, having a full package, because then.
And then maybe taking a chance in ordering the appraisal right away, especially if the house looks solid.
Well, yeah, I mean, I'm sure you're seeing this, and because we lend nationwide. And we're seeing now, obviously, talk to your realtor to verify, but I'm seeing a lot of appraisal waiver, because you're having all these people coming with cash and 20% down, and so that's up to you and your realtor. But I've seen a lot of deals where all the contingencies are waived, just to get the property.
Unfortunately, most of my buyers do not have the cash, because especially, and we're going to touch upon this when we talk about appraisal, but on rural properties, especially if they have more than 1 to 2 acres to them, appraisal and finding property that are good comps for them, that are very comparable to them, could be challenging.
Right.
But let's wait to discuss it in just a few moments. As far as new construction, so what I'm seeing is USDA loans being popular with new construction.
That's right.
Anything that you want to tell the viewers about, be careful or go ahead with the new builders who are offering USDA loans? Do you want them to consider anything before they go ahead and sign the paperwork?
Well, I mean, obviously, I think that I love that. I think it's great. We do mainly the USDA that we do our new construction, unless there are some parts of the country that are just rural in nature. But the biggest thing is obviously make sure that the zoning. So one of the things with USDA that every year they can do a new rezoning. One time this happened to me.
Oh no, because they're taking 9 months to build, right?
Yeah. This actually happened to me one time. So just so you know, there was a time when your whole area that you're talking to was on the fritz of being rezoned. So back in like 2016, 2018, and somehow the government, kept those areas, eligible for USDA, but you always run the risk of a few things. First off, they can rezone and then deem your area no longer eligible for USDA. The second thing they can do is they can run out of money at any time, because
the USDA program you're
yeah,
talking
the
about.
USDA, yeah. So this has happened to me a couple times where people is doing the new construction and it's taking 6 to 9 months to build the house,
Mhm.
and then the USDA runs out of the money, and then we have to put the person on FHA or conventional. So because they cannot wait, because now they have to wait for Congress to approve more money for the USDA, and that process takes about 3 months to approve and put more money for the USDA. And then the builder says, no, I don't want to wait, make them go conventional FHA, or they cancel the deal. So normally you have to be mindful of these two things, because they can happen, and that's out of the lender's control. The lender cannot do anything. Me as the lender, if the government doesn't have the money to guarantee the loan, or they do a rezoning, there has been some areas like in Houston where I'm at, where they did do a rezoning, and those areas are no longer eligible for USDA. So these are some of the things that you need to be mindful of. It's not something that you need to lose sleep over, because always the government, from my experience, has always come in and put the money there. They never said no, but it's a process that takes time, and then most of the time, like for example, Frisco is getting very big, and one day it's not going to be eligible for on the outskirts. Some of the outskirts of Frisco.
The Frisco is just now becoming like a small amount of small area where we can still get the USDA. I'm now looking more toward Princeton.
Yeah, Princeton. Yeah. I mean, but there was a time when that was a huge area. All is eligible for USDA. So, and that's that's a great example for your viewers that 10 years ago, that whole area, 10, 15 years ago, you could do all USDA. Now, slowly diminishing, because that's the purpose of the loan product, right? I'm supposed to.
The loan product actually achieved its purpose, right?
Yeah. Right. Achieved its purpose, because you brought commercial, industrial. Now look at Frisco. I used to have an office in Frisco 10 years ago, and there was basically nothing there except Main Street or whatever. And now I can't even believe when I drive over there, it looks like downtown. But then there's nothing wrong with that. It's just that that's what the plan is. And so,
question to you, as a realtor, let's just say that a builder is offering USDA. It's kind of on the edge, right? It's right on the edge. When I look at the USDA map, it's like right on the edge of the current map. Is there any way for me as a realtor to check if there are any plans for rezoning?
Yeah, you actually can. So you can, you as the agent, you can reach out to the USDA office in Texas, and you can ask them. They'll talk to you. They're very receptive. They're not, they're very open. They talk to you. You can ask them, hey, I'm looking to put a customer over here in this area. It's a new build. Do you have any plans for rezoning or what's going on? And they'll share it with you. They're very open. The people that I've dealt with. And so, they'll tell you, look at, this area looks like it's going to get, rezoned, or it's not, everything's okay. So you can always check with them. The other thing that you can do, that I want to talk about as a protection for new construction, is if we underwrite the loan up front and we get the commitment from USDA, then that locks you in for 6 months.
Good.
So regardless, regardless of the rezoning. So let's say that we do everything up front on the loan. We send it to USDA in the beginning, and then the builder builds the house. Well, then you're protected for 6 months if they do a rezoning, right? So
is there any upfront cost to that?
No,
and you're locking in your rate, etc. So how would you lock in your rate then?
So what happens is, the interest rate is not locked in, but you're guaranteed. So what happens is we get the guarantee from USDA, and that's locked in. That's what we want.
Gotcha.
When they issue that guarantee, then regardless of out of funds, or regardless of a rezoning, I have protection from the federal government that, okay, this loan's when they give you that guarantee, the lender can make the loan. And then even if they do a rezoning, because they guaranteed that loan. And you can do that up front. Not every lender will do this for you. We'll do it for you. A lot of lenders will not do it, but we will do this for you.
Christian is your man, guys.
Yeah. But, man, I've been doing these loans for a long time, so I know the nuance. There's little nuances with these USDA loans you have to really, really know. And the only way you can know it is by knowing your stuff and going through it.
Gotcha. Well, in that case, let's go to appraisal. So what the issue that I'm running with appraisal, right, is people want to waive appraisal. It's a rural area. There are only like 4 other property that sold within the next 10 miles. None of them is even closely really, similar to my house. So I'm very hesitant to waive appraisal because I just don't feel confident that with no comps, I can tell my client confidently that it's going to appraise. On the appraisal, how strict is the appraisal? Like, let's just imagine that we're taking FHA and VA. Is that similar to FHA and VA or stricter?
Yeah, it's a good question. So yeah, just to be so everyone's clear, yeah. So the appraisal, and first off, I don't recommend waiving an appraisal unless, well, just I don't know, I don't remember, unless it's a very, it's a new construction, but still
like cookie cutter, right?
Yeah, I don't recommend doing it. But every once in a while, probably 3% of the loans that I see, they have an appraisal issue. But so the USDA appraisal has to be done by a licensed HUD appraiser. So he has to be licensed.
So they're using the HUD appraiser, right?
Yes, they have to be a HUD appraiser. It cannot be just a conventional appraiser.
Okay.
So they are following HUD guidelines. So basically, to your point, as FHA. So basically, think of a USDA appraisal like an FHA appraisal. They're very similar.
Okay.
But the thing on the strictness, and I'm seeing this a lot right now from realtors, listing agents. They have a apprehension to do FHA because they think the appraiser is too strict. And what I will tell you is that back in the day, the government appraisals were much more strict, but now, they're almost, not to the exact same, but probably 70% close to conventional in regards to how they evaluate a property. The biggest thing with government appraisers, and when I'm saying government appraisers, I'm talking about USDA, FHA, VA, is that they do a little bit more due diligence on the property, not as much as an inspection, but certainly more than what a conventional appraiser will do. And because of that, some sellers and listing agents don't like it because they can check, for example, okay, is these utilities working? They actually can touch stuff in the house. They can go in the attic. And a lot of conventional appraisers, they just kind of drive by, take some pictures.
It is actually the drive-by appraisals in conventional.
Yeah,
right now.
Yeah. So, and because of that, I had a long conversation with a seller last night, and he called me because he said, Angelo, I don't want the customer to do FHA, make them go conventional. I said, well, wait a second. We don't have any overlays with FHA. So if the house needs repair, we can set aside escrow rehab money to fix the property. He was worried about the roof. He said the roof is too old. I said, let's go for it. And if we need a new roof, we can put that into the loan. With our company, if the house needs a little bit of repair and it's not structural or foundation, then we can put that into the loan to fix the house.
Can you repeat that? Because that's something that I didn't know about. So let's go over it one more time.
Yeah. So a lot when you're doing resales, sometimes, as you know, the house might need a little bit of a TLC. And the government, they allow for, if the house needs, let's just say, new roof, new AC.
Right, needs to be less than so many years old, right?
Right. Maybe it needs a new pantry or new cabinet or whatever. We can go up to 10% of the loan amount for those repairs, and they can be put into the loan. So let's say that the house needs $10,000 of rehab. Okay, you can still get the USDA loan, and then you put that $10,000. You don't have to pay it out of pocket. It goes into your loan, and then you can get a new furnace or a new air conditioner or a new roof to purchase that property. So what I'm trying to tell you is that government appraisers they're not so strict. We want to make the loan work, and they'll even allow that to happen to make the deal to go through. And so, and that's the thing I'm trying to set the record straight, because a lot of sellers and listing agents, they think that, these government appraisers, that they're just too strict and they don't want to do the deal. That's not the case. You can make it work. Now, not every lender is going to allow for the escrow repair. We allow for the escrow repair. Okay. And we don't have a problem with this. The point I'm trying to get is a lot of this is into the control of the lender and their guidelines. Okay.
How interesting, because I thought that it was all set by the HUD.
No, not only, so they have, okay, for example, let's say that, one of the things that HUD is a stickler on is like chipping paint.
Okay.
Or no railings on the walkway. So let's say you don't have that on the house that has chip paint and no railings on the stairs or something like this, and maybe conventional says that's okay. Well, if the borrower doesn't qualify for conventional, because that is a little bit more stringent requirement, then with the USDA, I can put that money for the fixing the chip paint and put that money for the railing into the loan. And then we can include that, and then the borrower can get the loan with the USDA and then just roll that into their loan.
That's so good.
That is a solution to make it work,
Because I think a lot of objection that I hear from the listing agents is about they're not familiar with the program.
Yeah.
They don't know how to anticipate the appraisal.
Right.
They're not sure what's going to happen if the appraisal is, how picky the appraiser is going to be. So that's why they're rejecting the USDA and going with something that they're more familiar with. So.
Yeah, no, and I understand that. I mean, the thing that I'll tell you, like, if you're working with the right lender, that the first thing you want to ask your lender, what overlays do you have?
What overlays do you have? Let me write that down, because that's something that's.
Yeah, that's an important one, because the lenders, they have a lot of control in this area. And so a lot of lenders, I will tell you, they have a lot of overlays with government loans. And what I'm trying to tell you is that we do not have any overlays. So what does that mean? That we follow exactly what the federal government has put as the guidelines for these loans. And so they're pretty lax on a lot of these things. It's because, for example, a realtor may think, well, no, the USDA doesn't make a loan if the property has chip paint. Well, that's not true. They do. It just has to get fixed. Okay. How do you get it fixed? Put it into the loan. Okay. So, so that I just want to clarify that, because a lot of agents think that, well, they're so strict and you can't have anything wrong with the house. And it's not true. You can. I've closed many loans that you'll put a new roof into the loan, new air conditioner, new kitchen cabinet. And because of the house was maybe foreclosure, had problems, old house. So actually, it's actually good, because it's improving the home, improving the value. And then, we made another sale. So, and we helped the buyer with a USDA loan. And so, this is a good thing. And I think if you educate the listing agent, explain to them, this is how you do it and how we can close. I'm
tempted to make a pamphlet and submit that pamphlet to the listing agent with our offer. I mean, no, seriously, because many of them are just there. You fear what you don't know.
Right.
The devil that you know is sometimes better than the devil that you don't know.
No, that's right. That's right. I mean, and so, and yeah, I mean, I agree with you. So yeah.
Okay. So then a lot of my customers ask me, I want 15 acres. And I said, 15 probably won't work, but do tell me, is there a limit? Because I know in conventional we have 10, right? Tell me how the acreage limit works.
Yeah. So basically the USDA, what they say is, I mean, so what we're talking about is the 502 guaranteed loan right now. So there's many types of USDA loans, right? There's USDA Farm and Ranch, USDA 502 Direct, USDA 502 Guaranteed. What we're talking about today is the 502 Guaranteed loan.
Okay.
And so with that program, there is no acreage limit.
Oh.
Okay. But there's a caveat to that they do not want the land to be worth more than 30% of the total value of the property.
I see. Okay.
Yeah. So let's say that the property is 300,000. They don't want the land to be worth more than how much? 90,000.
Gotcha.
Right.
Well,
So
that's actually not that hard.
it's not
That's
that
actually
bad.
not that hard because the land is not that expensive.
Yeah. So that's really their guideline. Now, I will tell you that that guideline is not a hard, fast rule. We've
Mm-hmm.
got some push through that, maybe it was 35, 40%
Mm-hmm.
of the total value, but that's really their general rule of thumb is they don't want the land to be more than 30% of the total value of the property. So, you can get 10, 50. The other thing is that what you mentioned earlier is comps. What they don't want to see is that, okay, if you have 15 acres and the next comp is 100 miles away,
Mm-hmm.
because that's just not going to make sense. And so they don't want to see these massive adjustments on the appraisal report because no one else in your area. But I mean, if the acreage for the other comps makes sense, this guy's got 22, this one has 13 acres, then that makes sense. But if you live next to a subdivision with a quarter acre every lot,
Mm-hmm.
you have 15, that's probably not going to work.
Mm-hmm.
But that's the general rule of thumb on land.
Gotcha. Now, a lot of them want to buy just land and then say, well, can we just have just land bought and then we'll build ourselves? Will the USDA loan work for that?
So the way that the USDA loan works is you can do, it's called a one-time close construction,
Okay.
right? But you have to, when you get approved for that, you have to buy the land and then build the home within 1 year. Okay.
So they can contract a builder. What kind of guarantee do they put in that it will build within 1 year? I'm not sure. I'm never.
Well, yes, and so basically, the want to answer your question. So buying land on its own right and doing no construction is not allowed. But
Okay.
what is allowed is if you intend to build on the home, within 1 year, and that's in the contract with your builder. So let's say that you go under contract on April 1st of 2021, you have to start the construction by April of 2022 to build the home. Okay, and you have to get approved.
Start.
Yes,
Mm-hmm.
and you have to get approved for your loan as a one-time close construction with the land, the blueprints, the cost budget, everything up front to buy that land. You cannot send that stuff later after you close on the land. You have to get approved as a one-time close construction for that land and home package.
Gotcha. That is a more specific question that maybe if you do consider this type of structure for your loan, go ahead and contact Angelo and ask him for more details because I don't want to spend too much time diving into it. But what about buying a land and they say it has a manufactured home on it? Mm-hmm. What are the rules on the manufactured homes? Now they're saying we want the manufactured homes while we're building our bigger home there, right?
Oh, okay. So
they say we can live in a manufactured home for a year or so while the construction is actually unfolding on what we're planning to achieve.
So they want to have the manufactured home on the land while they're building the house?
Well, they're looking, so that was, for example, one of my customers that you dealt with, right? He found a house. He found, I think it was 9 acres, and there was one manufactured home. Now that could potentially be a problem. I think from a standpoint of 30% of the value of the deal, the land cannot be more than 30% because I don't think that would work. But let's imagine that was a very nice manufactured home on only 1 acre or 2 acres, right? So in that case, potentially the 30% rule for the land value could still work. But what are the rules on mobile homes?
Well, okay, so there's a few things. So just so we're clear, the USDA does allow for manufactured and modular homes.
Okay.
Modular is considered single family, so it falls under the single family category. So you can do new or existing modular single family. Okay. Now, manufactured and mobile, you can only use manufactured and mobile for a brand new manufactured or mobile home that's never been titled. So if it's an existing manufactured or mobile home, the USDA will not guarantee that. So, so the person that wants to buy a land with 9 acres or even 1 acre, and that manufactured home is from 1993, it's already been titled, the USDA will not touch that.
Gotcha.
So that has to be taken off the property. because they will, the property, the rule for USDA is it can never been titled, and it can only be moved one time from the dealer to the land. If it's been moved more than one time, or it's been titled to somebody already, they will not guarantee that.
Oh,
Yeah.
no.
Yeah. So it has to be, so what, but you can buy a brand new manufactured home from the dealer, put it on your land with the USDA from like Clayton Homes or Palm Harbor or anybody like that.
How do you document that it's only been moved once?
So they can research it, because every manufacturer mobile home has a tag on it. It's called a HUD tag. It's been all of the times that the property has been moved. It's basically like your driver's license, how many tickets you have. So they can go and look on that HUD tag, the VIN number, and look and see how many times that property's been moved.
How interesting.
Oh yeah, it's crazy. Like I never knew any of this until I started doing USDA.
This is all completely new information for you. I'm so glad that we talked.
Yeah, it's very interesting that actually the appraiser can find this information out, and they can look it up on that HUD tag. If you go on the side of the, you can look it up on Google, or just go look at a manufacturer. It has a little red little tag. It looks like a license plate, and there's a VIN number on there, and they go and research. Okay, this guy bought it in 1983. He moved it over here, and then he sold it to John Smith and moved it over there. And they can do kind of like Carfax.
Wow.
So, and then they can see
Carfax for manufactured.
Yeah, they have it. It's true. So, but the good news is that if you want a new one, you can definitely do a new one on your land. No problem.
So what would be like, imagine that they're still exploring their options. They found that piece of land that they really like. It has 5 acres on it, right? What would be the easiest way for them to start? Because they plan to eventually build a nice, 4-bedroom, 3-bath on it. But right now the funds may be lacking. They're not approved for such a big loan, but they could potentially get a manufactured home, right? Absolutely. So what would be the easiest way for them to go?
Well, yeah, I mean, so basically, let's say that you find them the 5 acres, and then they go to, let's just say we use Clayton's approved USDA manufactured home dealer. Clayton's very big.
Very good. We might need to put the link to Clayton's in the description.
Yeah, it's a very good company. And so basically you could take them there, or they can, you go with them. They go get the cost budget from Clayton, for the home that they want, double wide or single, triple. One thing, it cannot be a single wide.
Cannot be a single wide, must be a double?
Yeah, double, yeah, or bigger. I think that's triple wide too. So,
okay.
But you get the cost budget from them. They're going to give you the budget for, it's called a turnkey installation, right? So
turnkey installation.
They're going to do the well, the septic, foundation, everything. You can be on permanent slab foundation, or pier and beam is fine. But basically they give you a cost budget for everything. Then you go under contract with the land. Then you give me the budget from Clayton or any dealer that you work with. And then us as the lender, we underwrite the whole thing with the turnkey installation. Let's say the land is $50,000. The turnkey installation is $150,000. Then we give you a loan for $200,000 because the loan is 0 down, 100% financing. And then we close on the loan. We go through the whole process, appraisal. We do an appraisal assuming that the land and home are already together. So we take all this information, the land contract, the bid from Clayton, we underwrite you, and then we put it all together. We go through the USDA, get the guarantee, and close. Now, what happens is after the closing, us as the lender, we do a draw schedule with. So
you do draws. Okay,
yeah,
gotcha.
You have to do a draw schedule on this.
Gotcha.
So the land.
If you will just drop 2 words on what the draw schedule is, in case my friends don't know.
Yep. So, well, what happens at closing? So obviously the landowner got paid off his $50,000. He got his money. Now you own the land. You as the buyer own the land, but now the lender and the dealer have to make a draw schedule. And basically, what a draw schedule is on this $150,000 because nothing's on this land. It's a raw land. There's nothing there.
No utilities. No
utilities. Nothing. So he has to go do excavation, put the culvert, all this kind of stuff, fix the pad. And so that has to be broken up into phases of construction. You just don't go all at one time, right? I mean, and I'm not a builder. I've been involved with the process. So this draw schedule, let's just say that you have 150,000 and you're going to break that into, let's just say 3 draws. What does 3 draws mean? Well, the lender and
50,
the dealer are going to do 50, 50, 50. So the first draw is to clean the lot, prep it, put the plumbing, put the septic, put the well, put the pad, and then the dealer has all the tradesmen that go out to do all that work. They do all that work. We send the inspector to check the work, and then we release the 50,000 to the dealer. So that's the first draw, right? And then you do the second draw. I'm going to do the delivery of the manufactured home, put it on the foundation, and then we release the 50,000. And then the third draw, he's going to do all the flat work, put the driveway. He's going to finish if you want any build outs for any, storage or sheds or whatever you put over there. And then we send the inspector again. So there's 3 inspections. We do not release the money until the inspector approves the work. And then we send the third draw. And then what happens is the loan is done.
So when is the closing? So at what point do you actually close?
Whenever the land owner got paid, we close.
Okay,
right.
so the closing happens at the purchase of the land. Gotcha.
Yeah. Then on these draws, what's happening is you as the buyer, you're paying the interest on the draws. So let's say that
I'm paying the interest, but not the principal.
Right.
Ooh, okay.
The interest. Now that interest, the USDA is very nice about this. They let you put that into the loan.
Okay, so you can actually finance that.
Yes, you can finance the interest in the loan. Yeah.
Wow.
So the interest goes into the loan for example, up to 6 months, and then for this particular project, so you don't actually write a check for it. It's put into your finance into your loan, but basically at the end of the construction, the builder's paid off. We do the final inspection, and then you're issued like a certificate of occupancy. But if you maybe the area that you're in, if you're out in the county, they may not require that.
Mm-hmm.
Then at some point when he's completed, then you're allowed to take possession of the property and actually move in. And
Gotcha.
at that time, you start making your payments back to us as the lender.
Gotcha. Cool. That was very in-depth. Thank you so much, Angelo. Advice to borrowers considering USDA loan.
Yeah.
I know a lot of people say, what about USDA loan? And I give them the link and they start their research. Anything outside of just, simple $92,000 or whatever it is for Texas, anything else that they need to consider?
Yeah. There really is, Elena. I mean, there's the biggest thing for USDA, obviously there's income restrictions. So we have to make sure that you meet the requirements for USDA, and this is all on the link to, you can put the USDA map, the eligibility. So, and the income is based on how many people are in the home. There's the good thing about us is that we are experts in it. So we know what deductions can be used, like, medical, if you have children or elderly people living in your home over 62 or under 18, you have deductions for that. Some work-related expenses, Medicare, Medicaid, and basically you just got to make sure you qualify income-wise, and then location-wise, that you're in the right location. The other thing I want to talk about real quick is the credit. So USDA, basically, how you can think of USDA to some extent kind of mirrors conventional. Okay, so to some extent, like the debt ratio is very important to USDA. So you cannot, like FHA is very liberal, EA is very liberal on the debt ratio. Basically, they put a 56, 60%. The USDA will never do that. Okay, they're very strict on the debt ratio because it's 100% financing, and they're not a military veteran. So the maximum that they'll do ever, and that's if you have an 800 credit, is 45%. But most people is around 41% debt ratio. Okay, and they don't like it when you have a bunch of collections or charge-offs that you haven't paid. They're not comfortable. Sometimes the USDA may ask you to pay those. So you got to check your credit and try to fix your credit a little bit even though they say they take 620, if you have any like major issues with bankruptcies or foreclosures, or a charge off or collection, we have to address that to have a plan up front. I'm not saying they won't do it, but we have to show some type of extenuating circumstance. Maybe there was a health issue or job loss. They are very open and forgiving to that. But, they're not going to, somebody that hasn't been paying their bills on time and they just, bunch of charge offs and collections, they're not going to be comfortable with that loan, even though they say they take 620.
Take it with a grain of salt, right? You need
Yeah,
to
because I've seen it. I've actually seen it many times where, somebody basically had a bunch of charge offs and collections. We approve the loan as the lender, but then we go to send to get the guarantee. They say, no, he has to pay that. So he has to pay all those collections. So, and then the customer, sometimes they get upset and I say, look, it's not our fault. That's the government. The government said you have to pay it. I cannot make the loan to you until you pay it. So now every state is.
When you say that we can underwrite the loan up front, would that resolve that issue if
Yes,
we underwrite the loan up front?
yes,
Okay.
It will resolve that issue. Now I will tell you,
Okay.
Texas was surprisingly, Texas historically has always been a little bit more forgiving. Than some other states, like Georgia is very strict. They will not let you buy a house with open charge offs and collections. Texas, sometimes they will do that. The reason why I'm talking about this is because you do have to be mindful of the debt ratio requirements, because what I'm telling you is that, with the debt ratio limited to 41 to 45, you just have to make sure that you're not, when you apply for the loan, that you're not overextended on your credit, because then it's going to reduce what you can qualify for.
Question about cosigners. What about cosigners?
Yeah, cosigners are fine. The only thing is that
who can be a cosigner? Can a non-blood relative be cosigner?
No. So the way that, yes. So there's a few things. So there's a little caveat to that. So yes, it can be a non-blood relative, but in any of these cases, the cosigner has to live in the property with you.
So they need to be owner occupied, right?
Yeah. It cannot be a non-owner occupied cosigner like FHA or conventional. FHA or conventional will allow for a non-owner occupied cosigner. USDA will not allow for that.
Gotcha.
They have to live in the home with you at the time of application. Now in the future, if that changes, that's one thing, but at the time of application, they have to be living in the home with you, when we go to closing and everything. So they don't have to be blood relative. It could be your best friend.
As long as they're owner occupant.
As long as it has to be owner occupied. So yeah, that's a big thing with them, because this loan, no money down, no money to closing, all this, and so they want to make sure that nothing, that nothing is funky is going on. So they just, yeah. So, but yeah, these are very, very good questions, and this is actually a very informative video about USDA because it teaches you a lot.
Yes, it does. Well, we're almost to the top of the hour. What can you tell us about Angelo Christian Financials?
Yeah, I mean, so like I said, I've been doing this for almost 20 years. We've funded almost $3 billion in loans. That's translates to several, almost 13,000 clients. So what does that mean? That we've helped serving America for almost 20 years and turning renters into homeowners, giving people the funds to purchase their home, refinance, put them in a better financial position. And one of the things that we're open 7 days a week from 9 a.m. to 9 p.m.
Are you kidding?
No, I'm not. You can call and then you work with my team directly. So it's not like a third.
Now, guys, what you just heard is almost a sacrilege, right? Usually lenders don't want you calling them on a Sunday.
Yeah.
No.
We are open. You can call or text us. I think you and I worked on a transaction.
We did, yes.
Yeah, and we're getting emails every hour of the night.
I was surprised. It was even at like 10 o'clock in the afternoon, in the evening. I was a little shocked.
Yeah, that's how we work, though. I mean, that's the thing, because in real estate, like I got a contract. I got from probably 9 o'clock last night till 6 o'clock in this morning emails from realtors with contracts coming in. and people that are, you know, usually really successful in the business. I mean,
we work, yeah, I work till 1 o'clock in the
yeah,
morning to
yeah,
make sure that things are done.
yeah. And so that's the thing, right? The service level, it's kind of like a doctor. When one of my children was born, he was born at 3 o'clock in the morning, and the doctor rushed from his house to come deliver my son. And you have to have that type of mentality. You're not like, oh, I'm sleeping, leave me alone.
Right.
You
I'm
know,
not,
so,
I'm, you know, my office hours are, you
yeah,
know,
yeah. And there's a lot of lenders, unfortunately,
they are, yeah.
that they work like that, and they're like, oh, you know, don't call me on after 5, or it's happy hour, or it's
Oh, you can call me, but leave me a message, right?
yeah,
I'm
yeah,
not getting back to you for
yeah,
anytime soon.
yeah. So, and the reason why I bring this up is because you're asking about how we're different. That's really is, you know, we're obsessed with helping our
Wow.
clients, you know, to the best of our ability. You know, and then we also help our clients with credit repair if the person doesn't qualify. And then the other thing is that
So wait. Do you do credit repair in-house?
yeah. So we do the lending, and we are, and just so you guys were clear, we are a direct lender. We're not a broker. We're not a consultant.
Okay.
We are the one making the mortgage to you and giving
Okay.
you money. So yeah,
Okay.
I want to clarify that because a lot of people, when buying a house, they don't know who they're working with or what's the process or what's going on.
Most of them just call what they're called. I don't want to name any names, but they just on the website it says, you know, click here to see if you qualify for this rate, and they go with some.
Yeah. So that's an important thing. But then the other thing that I was getting at is, you know, so with sometimes how it is in our business, and maybe I don't know if anyone watching this, if you've ever been denied for a loan, it can knock your ego, and it affects you. And so I've been denied for loans personally. And it's bothered me, and people don't like to get rejected. And so with our company, one of the things that we're different is we don't try to figure out how to deny you. Our whole focus is how do we approve you? What do we have to do? Right? So how do we structure the loan to get it approved for USDA? Well, if you did X, Y, and Z, then you can get the loan.
Wow.
Right? And so where a lot of lenders, if you don't even meet their initial requirement, they don't return your call and they send you a letter in the mail saying you're denied. So we're going to talk to you and work through it together. Maybe your credit score is 617, but I see a chance, a way to get you through for USDA if we can boost your score up. See? And so there's little things like that that make us different. We look at the opportunity and not as a issue or a problem. So that's really a big thing with us, is that we're very focused on the solution, and we put most of our energy on the solution and not the problem.
So I must say to you guys, those of you who are listening right now, I don't work with too many lenders. Usually I pick a lender and I kind of stick with that lender. What Angelo is saying is kind of unique in several ways. The in-house credit repair, I've never seen that. Being able to contact him on a Sunday to resolve an issue, or to have him to return a call to a seller agent, that's very unique. Very unique. Usually you don't get that opportunity with other lenders. Not being able to, not focusing on the problem, but focusing on the solution. I actually never seen that before. So that's kind of very unique approach. So just to let you know, I'm hoping and I'm assuming that your credit scores are, you know, up to 800s, etc. But if you don't feel confident about your credit scores, if you're worried about your credit background, contact Angelo, because that person seems to be more solution oriented than just a strict, you know, yes, no type of a person.
Right.
Well,
that's true.
cool. Well, thank you so much, Angelo. Let me just go ahead and put your contact information for our viewers. So go ahead, and I'm going to put more links in the description of this video below. So check out the description of the video. His email information, his phone number, everything will be in there. And my name is Elena Garrett. Feel free to contact me with questions, because Angelo can help you on the financing side. But before you get to financing, you actually need to find the property and make sure that that property is not just looking good on paper. I can actually show to you that it will be beneficial to you and serve your family well. With that said, thank you so much, Angelo, and I'll talk to you soon.
Thank you so much. Appreciate you. Thank you. Everyone take care. Bye-bye.
Thanks. Now, Angelo, do you mind sticking around for just a second?
Sure.
Question 2, you seem to be a very innovative